All right, so welcome to another video. Today, what I want to do is something a little bit different. And what we're going to do is we're going to go ahead and take a look at my personal review and reaction to someone's trading rules on Reddit. I had someone send me a note on the live chat, I believe, maybe it was an email, where they were asking about trading rules, and we got into the discussion. And what happened was they were saying, hey, well, this person made some trading rules on Reddit. What do you think about these trading rules? And how would you kind of do them a little bit differently? Or what's your thoughts on it? And I thought this would be a good video to make because I haven't made a video like this in the past. I haven't done a review of other people's content or kind of some blog post in the past reviewing those kinds of things as people get into trading. Back when I first started, there was a lot of dial-up content, so it was all on DVDs, and there was a very little discussion from a video standpoint where I could get people's opinions so quickly and on video and so detailed. So nowadays I thought, okay, well, why don't we go ahead and give this a shot and take a look at it. So we're going to go ahead and take a look at this. We're going to go in and check out these trading rules and check them out. And if you do have specific questions, definitely reach out on our Discord channel. You can check that out by just going to the link in the description below, and you can log in and go on Discord and chat and ask me questions specifically. Maybe you have some more about your trading rules, or of course, check out some of the live classes and freebies that we have available on our website at tradersfly.com. And now a quick message from our sponsor. You don't have to spend hours analyzing stocks. Instead, you could use a tool like VectorVest to go ahead and give you the answers that you need about a stock very quickly. Their free stock analysis report gives you full fundamental and technical analysis in just seconds. So if you're interested in trying VectorVest, go ahead and visit vectorvest.com or check the link in the description below. Okay, so let's check out these trading rules. So this, I guess, was posted 6 days ago. So by the time you're viewing this, this might be like, 2 weeks, 4 weeks later. But I'll give you my personal thoughts and insight about some trading rules. And my goal is always, hey, I want to respect everybody because we all start at the bottom. One of my instructors always said, hey, everybody works, nothing is free, and everybody starts at the bottom. So there's no disrespect regarding the trading rules. I'll just give you my personal thoughts and takes on the rules so that you could make them yourself to apply them for the future. So let's kind of start out with these. I'm going to go ahead and zoom in on these a little bit more so you can see this person's trading rules. And I didn't really read too many of these comments here. There's always some people that have a handful of opinions. So I'll just give you kind of mine without reading some of those below first. So this is kind of a first shot, and we'll see how it goes. All right, so trading rules always have an exit plan. What is it? So before we even get into all these trading rules, I think it's important to understand that when we're dealing with trading rules, like what is really the point of the trading rules? I like to look at more of it, rather than trading rules, more of a trade ritual. What is it that you do before the trade? What is it that you do during the trade and after the trade? I think of it more like a cycle of things that you do. So it's like, okay, before you get in, during, and after. So it should really have kind of an organism, a lifeline to what's going on. So as we go through these trading rules, always think about this when we go into this. So first off, before we even get into the exit plan, first I would think, hey, what is the entry criteria to getting into a certain trade? Right. So I found like reading these trading rules, they were very similar to what I had when I first started out. But now I'm going to share with you some insight on how that has evolved over the years. So I look at it from stage one. It's kind of like, okay, I'm going to have different buckets in my trades. So I will have, let's just call it 3 strategies for now. And I might have like long investment strategies. I might have some theta based strategies where I'm making money from options or theta. I might have some speculative or fast trades that I have. So, I have 3 different buckets where I'm making money. So each one of those should kind of have their own trading rules or rituals or a system in place because they're going to be functioning a little bit differently. So if we always have an exit plan, that's fine. But what is the entry criteria? So each one of these should have its own kind of entry criteria. So what's going to be the entry criteria, and when do I get in, and kind of why? What is the reason? What is the trigger? Not the condition, but the trigger that I get in. So that's kind of step one. Always having an exit plan is absolutely, what is the max you're willing to risk? What's the max loss? So you definitely want to have this because then you can know when to pull the trigger. But in certain trades, you might not have a max loss, because if you have a certain trigger where you're long invested And I have, let's say, in some of these long investments, I just have ETFs that I'm putting them money in there to die, because my plan is just to put money in there. So what I'm trying to do is, let's say, make money actively, maybe money from theta. And then what I'm trying to do is fund my SPY position or some ETF. Then in that case, there's really no exit plan. The exit plan is going to be more during retirement. So I'm going to just start pulling money out during retirement. So in that case, that's a different exit plan. So you have to think, is this for active trading or long investment? Know why you're getting in the trade. Do you? Okay, so rule number 2, it's kind of interesting. The reason why I could say, hey, because I hate the stock, it's fine. I could say because, they have a lot of sales, because their PE ratio. There's a lot of reasoning. So then that way, the reasoning actually, if you have the exit plan, does it really matter on the reasoning based on your exit plan? So it really doesn't, because when you look at the why, if the why does matter, then the why should be tied to your exit plan. Otherwise, you need to tie it to kind of a risk reward. I don't know if that makes sense, but basically what I'm saying is that your reason to getting into the trade should really be more along the lines of your trigger to getting in, your trigger to getting out, your max risk. You're watching your risk. That's kind of what you're looking for. And if you have a why, then you probably are tying it to also your exit. Otherwise, it really doesn't matter. Sometimes I get into trades because, man, they look good because the setup is like looking like it's going to explode because of the candlestick. And that might be the why. And it goes into like my spec bucket, where it's like my reasonings are all over the place. Whereas my, let's say, theta trades, I'm more systematic. And then I'm like getting into them every single week, every single month. I'm consistent on them. So that's going to be a little bit different, where we're kind of looking at actually this trade or this rule right here won't apply as much. So I'll talk about that in a second. All right. Have a plan and stick to it. Yeah, absolutely. You definitely want to have a plan. When do you enter? When do you exit? How do you manage the position? How much capital do you want to employ? Is it a 1 month trade? Is it a repeatable trade? Is it a 3-month hold? Is it one that you will add money into later? Is it one that you will reduce? So yeah, definitely have a plan. But the better approach here is to be more detailed, is what is your plan, rather than, hey, have a plan. Yeah, I have a plan, but what is your plan? What is your plan if it goes down this much? What is your plan if it goes up this much? Be more specific and strategic on that plan. So again, each of your buckets or systems should have kind of a breakdown of the strategy. Never enter a trade naked. This I have to disagree. It depends on the strategy. So if you're just selling puts on a certain stock, like let's say it's Twitter, and I want to accumulate Twitter shares, well, I could easily sell naked -1 put contract on Twitter, because I just want to pick up another 100 shares, and I could do like 10 of them. I could do 5 of them. I could do 2 of them. I could do 1 here, 1 there, and 1 everywhere. There's nothing wrong with doing things naked if you're willing to be assigned some option trades. So I think at the beginning, it may be a little bit tough for people to kind of gravitate that. Also, if you don't have enough capital to get shares assigned, then yeah, absolutely. Maybe this will be your rule, and that's okay. From my perspective, I think there's nothing wrong with entering a trade naked, but in certain strategies, it may not be viable depending on your situation. So be careful. Never risk more than 5% of your account. Again, this would depend on, are you doing it on a per trade basis or per basket or per strategy? So if I have like a ton of ETFs, I might actually, let's say, have 60% ETFs. And in that case, I am risking more than 5% of my account. So again, be specific. If it's on a single trade, then as well, let's say I'm doing an iron condor. If I'm risking more than 5%, I could do it, but I would probably do it with some extra puts or some protection. So again, you could be a little more careful with that. I would say most people do trade too large, so be a little more careful with that, and don't over risk. 3 to 5 trades max per day. Rule number 6. This trade is interesting, or this rule is very interesting. I think it depends again on the account size. If you're under like 25,000 in the US, this might be definitely something to watch out for, because you could get the pattern day trader rule, and that could be an issue. However, for me, I can easily do 15 trades a day, no problem, not blink an eye. I'd say at minimum I'm doing like 10 to 15. But they're going into different portfolio buckets. Some are 30-day trades, some are 90-day trades, some are for 100 days. I'm looking for further out. Some are long investments, so I'm constantly like adding and tweaking my inventory all the time. So again, depending on your account size, you might say, okay, well, I'm not doing more than 3 day trades. Like if you're doing like day trades, that's a different story. Then yeah, in that case, for me, yeah, I probably, from a day trade perspective, I only do maybe 1 or 2 a day at most, just because it really, you have to focus on those a little bit more, and you got to kind of keep an eye on them. Usually I do them kind of Monday, Wednesday, Friday, from an option spread perspective, like the SPX for the expirations, or like, it's just better conditions for me. But 3 to 5 trades max per day. Again, be specific. Is that for just day trades, or is that, what basket is that for? So be very, very specific on your trading rules. If trading profits slow down, stop. And then if 2 losses occur in a row, stop. So these are good stopping points. However, I will say that a lot of times when you're looking at probabilities, and I will pull this up for you, that you do want to be consistent. Look, if you're trading, the business is really about probabilities. You're basing things on probabilities and number of occurrences and a sequence of trades. So if I'm trading McDonald's right here, and I'm trading it to the upside, so let's say over here, I have kind of like a loss. Then over here, if I would have stopped, I got 2 losses. I would have had a win, but I stopped. So remember, this business is about like a ton of trades across a series. So if you do stop, you don't know when that run is going to start back up. So you have to look at your overall basket or plan for the strategy. So again, if I have loss, I got 3 losses maybe, depending on your duration, depending on if you're trading weekly. But now, look at this. I would have had wins if I was trading to the upside. Win. I would have had maybe 4 wins. But if I would have stopped, how long am I stopping for, right? Are we doing it from a perspective of, hey, I had 2 losses in a row for the day and then I stopped for the day? Is that what we're getting at? Or are we getting at, hey, 2 losses in a stock and then I stopped trading that stock for how long? 3 weeks, a month, a year? Is it like totally dead because I'm burned? I mean, after a while, you'll run out of stocks to trade because, there's always losses on different stocks and positions. So anyway, so be careful with kind of saying you're going to stop here, because if 2 losses occur in a row, stop. Well, yeah, I mean, I've had 4 to 6 losses in a row, no problem. It's just you might trade a little lighter because you're waiting for things to return. And remember, the more that they're kind of going against you, like let's say a stock is going down, the more likely it'll snap back up more rapidly. It's the same thing here that happens, in the SPY. It goes down, and the more likely it goes, the more it goes down, the more likely you get a really strong snap in the other way. It's like a spring. The more it goes one way, the more that it's going to go in the other direction. It's that energy. So be very careful with something like that where you're stopping. As long as it's, if you're getting too emotional, that's a different story. And if you can't handle it, then obviously stop and slow down. But you can always just trade lighter, less shares, less contracts, more defined spreads, tighter spreads. And that's another way to approach it, or even longer duration. And then the last one here is exit on technicals, not on P&L and emotions. Yeah, that is of course what you want to do. And if you find you're getting too emotional, you're probably trading too large. So exiting on technicals is what you want to do if that's what your strategy calls for. But again, it depends on your strategy. Sometimes P&L can be a trigger point for getting out. So for example, if I am always making $200 a day on a certain spread, let's say it's an iron condor and I'm making 200, well, the most I want to lose is maybe, let's say 425, because I want to risk maybe like 2.5 or 2.25 of what I'm making. Well, if I hit my P&L there and that's my stop, then that's what I actually do want to exit on. Because if I'm making 200 consistently and now I'm losing 425, that is my loss point. Because at the end of the day, it comes down to profits. Yes, the technicals might be okay and they look fine, but if I'm down that much, you can reset the trade because you're not seeing something correctly in that trade. So be careful with, again, just doing it on technicals. It depends on the strategy. From a P&L standpoint, if a certain trade makes you, let's say, an X amount of dollars, and you're have a certain dollar point to get out, you definitely don't want to run this to down, let's say, $3,000 because the technicals look okay. So again, that's just my own personal thought, just looking at kind of this kind of stuff, and just to give you some perspective. Yeah, trading is definitely hard. There's some tidbits here. It's definitely hard. It's tough to be disciplined for a lot of people, just in general. For a lot of people, sticking to the rules also very difficult for people. Even sometimes for me, I break the rules. But when I break the rules, I do go lighter, like super light, not as big. Backtest trades. This is all good in theory. Most people use the back testing software and stuff like that, and that's great. The big boys, they use the forward testing, and they use the Monte Carlo simulation, so take a look at those. Journal trades, absolutely, I'd say this is a must. Analyze the trades before and after. Yeah, this is good. I usually do a monthly review rather than kind of right after, because sometimes if you're doing like 20 trades, one of them is just a one-off flaw or whatever. So it's not enough data points to really evaluate it and with any usefulness to it. So I usually look at it kind of at the end of the month or after 2 months. That way I have enough sample size. So anyway, so that's just my personal thoughts and just reactions overall to these trading rules. If you want to send in something that you want me to review and take a look at, just give you my opinion and my reaction, that's cool. You could do so on Discord, and just you could go ahead and sign up. It's just like a chat room. You could also email it off our website, and definitely check out some of the live classes and things that we've got going on here at tradersfly.com. So anyways, I hope that helps. Thank you so much for joining me. Truly appreciate it. And I hope to see you in one of the live classes coming up. Thanks again. I'll see you next time.